Hey, good morning, good afternoon, good evening, Infinite Crypto Cruisers. Hey there, folks. My name is Brad Varnell, and this is the Infinite Crypto YouTube channel. And folks, I wanted to hop on for a couple of quick minutes tonight. Unfortunately, it looks like Stephen Ward, the founder and CEO of VyFi, is having an emergency. Some things are going on that are going to keep him from being able to be here tonight. And that's disappointing. I know that that sucks for everybody involved. The good news is I'm still going to hop on here and just talk about VyFi for a couple of minutes, give you guys a little bit of a taste, give you an opportunity to go do a little bit more research and due diligence on the project. And then hopefully we will get Stephen back on the channel very, very soon. Folks, I know we promised a giveaway today. And so what I am going to go ahead and do, I'm also going to do a $100 giveaway still today. And then, hopefully Stephen and the VyFi team will give me another 100 when we actually do the real stream. But those of you that have been patiently waiting and hanging out, I know that some of you were in the chat for 45 minutes waiting for this thing to go off. So I do want to still reward you all with a $100 giveaway. That is going to be, folks, in VyFi tokens. So I'm going to have an opportunity to have you update your YouTube bio. I'll show you how to do that when we get ready to actually do the giveaway. I will show you how to update your YouTube bio. You're going to need a Cardano address, a Cardano wallet, like a Vesper wallet. I forget the name of the other popular ones. This is a decentralized protocol right now, so you're not going to be able to hold these tokens like in an exchange. So I'm going to give you guys a little bit of time to get yourself a wallet that holds Cardano-based tokens. And for today's giveaway, I'm just going to give two people $50 worth of VyFi tokens. And then on the next one, the official one, when Steve gets here, we hopefully will be giving away another $100. But thank you all very much for being here. I'm gonna make this quick because you guys are going to come back for the real stream when we get this figured out and get Stephen back and in a good situation to be here with us. I know that he's very sorry that he couldn't be here. Very, very much unlike him to not be here for an event like this. In fact, I want to just still go ahead and read this off because I was getting ready to introduce him today, and I kind of wanted to make sure that I got it right. And so this is kind of the introduction that I was going to give Stephen. So I want you guys to know a little bit about this guy so that you're excited, to come back and see him. And so this is what I wrote. Tonight's guest is a crypto OG. He has a rare intelligence that is combined with incredible blockchain savvy, and it's allowed him to create an incredible DeFi platform on the Cardano blockchain. He's an investor. He's a professional trader. He's also obviously the founder of VyFi. And since Stephen and I met in August in Las Vegas last year at the Rare Evo event, he has become a very good friend of mine. So folks, this is a guy that you're going to want to listen to, because not only does he have the platform, the VyFi platform? Not only did he create this incredible decentralized finance platform on top of the Cardano blockchain, he is one of the most intelligent people that I have come across in the cryptocurrency space in my 9 years here, working in crypto. So I'm really sorry that you didn't get a chance to, get to know him tonight. But on that note, let me run over here. I want to show you guys the VyFi website. So if you want to go check out the VyFi platform, you can go here to app.vyfi.io. And so folks, this is an incredible platform, and I really want Stephen to be here to go through all of the things about this platform that make it, somewhat unique compared to so many decentralized platforms. And one of the things that we were three things that we were really looking forward to talking to tonight was the new Safe Swap protocol that they put in place. They've got a new VyFi liquid manager, and they just announced a big token burn for the VyFi tokens. I don't know if that token burn has already happened and we were just going to be talking about it. I think it might have already happened, but I'm not 1000% sure. But those were a few of the things that we were going to go over. You know, one of the reasons that I was so excited to be doing this show tonight is, you know, I've been learning more and more and more, folks, that capital gains is an amazing thing, but passive income is also incredible. In fact, I'm going to give you guys just a quick little preview of my Monday morning Crypto Mindset Mastery that's coming up this Monday at 9 a.m. Pacific Standard Time. And I just want to give you guys a real brief synopsis. But let's just say, for real quick here, let's just say that how long would it take you to save $1 million? Well, obviously, that is going to depend, right? You know, everybody's going to have a little bit of a different answer on that. But I mean, even if you could save, you know, a couple $1,000s a month, that would only be, let's say, $25,000 a year. It would still take you, what, 4 years to get to 100? So it would take you 40 years at $25,000 a year, disregarding like compound interest, just saving money to get to $1 million. Even if you could do $10,000 a month, it would still take you over 8 years to get to $1 million. Now, I would guesstimate that there's a lot of you watching this show today that would like to retire, that don't necessarily want to have to go into your job tomorrow, and would love to be able to tell your boss that you can no longer afford to work for them. So what a lot of people in this world are doing is they're looking to save up, say, $1 million, because let's say that you had $1 million in the bank and you could earn, say, 6% interest on it. Well, that would be $60,000 a year. So how many months are in a year? 12. So that would be about a $5,000 a month income, right? 5 times 12 is 60. So my point is, if you had $1 million and you had it invested safely, that would create, you know, say a $60,000 a year income for you, whether you were working or not, which would probably give a lot of you guys a lot more freedom than you have right now. Well, what I'm going to talk about on Monday is how to create a $6,000 a month cash flow through cryptocurrency investing that doesn't take $1 million in capital. Because, folks, the fact of the matter is, if you had a side hustle, if you had a business, you know, that ran on some type of an automation, like it's called a continuity offer. What is a continuity offer? Well, that's something like, say, Netflix is a subscription where you just pay for it every single month. You know, your gym is something that you just pay for every single month. And so there's a lot of ways that you can create offers in your life. And if you had a $100 offer, like a newsletter or some kind of something that people were excited about, and they would pay you $100 a month for your knowledge, if you had 50 people paying you $100 a month, that would be worth $5,000 a month to you. And guess what, folks? My contention is having something like that in place that was paying you $5,000 a month is just as good as having $1 million in the bank. Because let's agree, let's say that you all of a sudden had the $1 million tomorrow. As soon as you spent $1, you would no longer be a millionaire. You'd only be a $999,999 heir. And so if you took that $1 million and you started spending it on stuff, you would no longer be a millionaire. So if we agree that you want to be a millionaire so that you can then earn $50,000, $60,000, $80,000, $100,000 a year in passive income, my contention is that if I can show you how to bring in $5,000, $6,000, $7,000 a month passively without having to have the $1 million, it's just as powerful. And so that's what I'm going to talk about on Monday. Let me see here. It looks like we might have gotten Steven here on the show. Can you hear me, Steven? It looks like I don't know if you're there or not. Let me see if we got you, buddy. In the meantime, so that's just a little preview of what we're going to be talking about on Monday.
Hello, I'm sorry, I'm having a technical issue right now, and unfortunately, I can't hear you at all. I'm getting no sound right now through from there, so I need a moment while I'm going to jump out and jump back in. I'm so sorry about this, my friend.
No problem. So while Steven is working on that and seeing if he can get situated, for those of you that are kind of new to the channel, one of the things that you could do that would really be helpful to me would be to show back up on Monday morning at 9 a.m. Pacific Standard Time, and I'm going to break this down in more detail and give you a formula to create passive income, because passive income is what allows you to really have the time and money freedom. My dad used to tell me when I was young that a lot of people have time and a lot of people have money, but very few people have both. And so from a very young age, I wanted that freedom, the freedom to take my kids to school in the morning, the freedom to pick them up, after school, to be able to take them to their sporting events, to just be able to be there, to go on a vacation without having to ask somebody else for permission. Like I don't even, a lot of these jobs, I mean, you could just go to the bathroom and that's cool. I understand. But like, I remember having jobs where, like it was so busy, like you would almost have to say, hey, can I run to the bathroom real quick? I was a poker dealer. For those of you that are new to the channel that don't know me, back in my previous life, I did a lot of different things trying to create financial freedom in my life. And let's see, how we doing now? Can we hear you? Can you hear me?
Okay, I'm done. Sorry about that.
No worries, guys. So we'll get over to Steven really quickly. I just was saying, I was a poker dealer in Las Vegas, and I did a lot of different things to create financial freedom in my life. And I finally ran into cryptocurrency back in 16 and 17, and it's totally transformed my life. And so without any further ado, Steven Ward, the founder and, I believe, are you the CEO, founder and CEO of VyFi? So the founder and CEO of VyFi, man, welcome to the show. Glad to have you, my friend.
No, thank you so much, and I apologize for my tardiness there. I've had a morning of technical difficulties, my God, tell you what. So sometimes it's just nothing on the internet wants to work, so I do apologize there, my friend. Thank you so much for having me on. It really is a pleasure to be here, and I'm really excited to tell you guys everything about what we're doing.
Yeah, I'm looking forward to that too. So I said a lot of nice things about you before you got here, but I would love for you to just kind of give my community and, and everybody that's watching today just a little bit more about your background and how you got involved in this crazy world of blockchain, and, just tell them a little bit about you.
Of course. So my background started, like professional background, I should say, started back in I can't remember the year, 10 years ago or so. I'm old now. I started as a hedge fund trader. So my educational background was physics. From there, I went into hedge funds and I became a quant. And a quant is basically someone that does the mathematics behind financial systems. So from there, I was in the hedge fund working in bond futures. And after working in bond futures for a while, I changed it up and I moved into stock brokerage. From becoming a stockbroker is just really a fancy way of saying spending a lot of time on your phone screaming at people. I'm not going to say that it's super mathematically complex, but I definitely got a really good understanding for I would say, the administrative side of running trades, right? So you've got the trading side and then you've got the administrative side. And I've spent in total about 8 years, 7.5, 8 years working between both the administrative and the trading side of the markets, right? For many reasons, I wasn't a big fan of the way that they were designed. I don't think I'm alone in that. That's sort of why we're here in crypto. So I decided to follow my passion and my dream and start really sort of focusing down on crypto because I believed that it was an opportunity to create a better financial system. So I ended up in 2017 making a lot of money, losing a lot of money. We all, the 2017 bull run was pretty wild. That was the first bull run I really experienced in the crypto markets. And I was said to myself, by the time the next bull run's here, I want to sort of have a cryptocurrency product, right? And with my background, it made sense to create a DeFi platform. I was a DeFi trader, and it sort of really rang to me. And I had a lot of problems with sort of the way that a lot of DeFi was designed, particularly back in 2019 when it was starting up, and the 2020 DeFi summer, which I was very heavily involved in. And then after the 2020 DeFi summer, we decided, look, I really want to do something about this, try to make these systems better myself. And that's how VyFi was born. Sort of back in mid to late 2020 was when the idea first came about, and we've been building ever since then.
Awesome. I love it. And what a long way you guys have come. I was telling everybody that we actually met back in Las Vegas at the Rare Evo event, in August. And, watching you guys continue to work through, this last 2 or 3 years has not been for the faint of heart. And so coming out of this on top and innovating the way that you guys are and the things that you're adding to your platform, it's pretty astounding, so congratulations on making it through those tough times.
Yeah, thank you. It's been a bit of a ride, that's to say the least. Crypto doesn't make anything easy for anybody. You hear these stories once in a while of these guys that, turn around and get really lucky and make $20 million in 3 minutes. I've gotten pretty lucky in my career as well. I've done fairly well on both SNEC and on SafeMoon have been sort of my two best trades. Got into both of those pretty much day one. But that being said, one good trade is just one good trade. You're not a good trader because you have one good trade. You need to have lots of good trades over many years where you're making a consistent income. And the big thing I've noticed is that a lot of those people that make $2 million really quickly, in 6 weeks, they lose the $2 million just as fast as they made it. Why? Because you have to have really, really high risk tolerances to make that kind of money. And that's why, and that being said, if you have too high a risk tolerance, it often works against you just as fast as it worked for you, right? So excuse me, had a little coming off a bit of a cough. So I really want to bring sort of my deep understanding of risk management that I had from my world in traditional finance, and that's exactly what we're doing with our products on our platform. We're looking at building the most advanced risk management the most advanced risk management platform that Cardano's ever seen, giving users the power to really build their own alpha. And that's something that Cardano has missed or is missing up until this point. And that's the ability to take your portfolio. And for those that don't know, alpha is just simply risk reward, right? It's just a risk reward ratio. What's the risk on my portfolio versus my expected reward on my portfolio? And in Cardano, you can't build up your own alpha. You can't build up profiles that have your own customized alpha. And we've now essentially releasing a system that allows users to do exactly that.
Awesome. So is there any particular reason that you chose the Cardano blockchain to build on top of? Mm-hmm. Was it just you have kind of a love for Charles Hoskins, or was there just benefits that you sought to the Cardano blockchain compared to the others, or what was it that made you pick that for your home?
Yeah, there are lots of benefits. It's certainly from a technical perspective, it's what attracted me. So I'm not really a fan of a cult of personality. I never have been a fan of cults of personality. I generally think that any individual, you can have great individuals that are really good at their job, but no individual's infallible. So it certainly wasn't Charles Hoskinson that attracted me to it. But as you might have heard earlier, I was a physics major, right? Which means I have a really heavy background in mathematics. Probably less so than a maths major, but certainly more so than the average person. So as a result of that, I really was attracted to sort of the mathematical foundations of Cardano, the way that they're using functional programming, the way that as a result of that, there's a lot of safety measures that are sort of built into the system. The mathematical determinism and completeness of the entire system I was always attracted to. So sort of the security advantages, because unfortunately I've been through now, I think 5 rug pulls personally that I'm aware of. So when you're in the ecosystem for a while, something that has a bit more safety is something that I sort of was attracted to as well. And from there, I would just basically say that it was also the ability to differentiate our product. So when we started, Cardano didn't even have smart contracts yet, right? So we've been around for heading on 4.5 years now as a business. And that means that we were able to differentiate ourselves from a market that was full of projects. Every other blockchain was packed. Cardano, we only had one or two other dexes on the entire blockchain building at the time that we started. We would have been the first two, right? I'm pretty sure we weren't the first one. I think the first one that announced anything that they were doing was Sunday, but very early in the piece. So yes, that was allowed us to build up an audience, and it also allowed me and us to build out a product that's incredibly safe and incredibly mathematically sound.
Awesome. So with that, let's run over to the app.vyfi.io website here and give you an opportunity to kind of highlight, you know,
can you do me a favor?
Sure.
Can you do me a favor? I'm going to go onto something. I'm going to send it to you in the chat. Could you go to this, please, instead of that?
If you're on your computer, you can always hit the present screen too at the bottom, and I can add whatever you want to the screen so that you can navigate it and click on it and show it yourself.
Unfortunately, I'm not on my computer. That's part of the technical issues that I was having.
Yeah, so shoot that to me in the private chat if you can.
Yep. Right now. And what I'm going to do, because we've got our V3 decks coming out very soon, and we are essentially reimagining quite a few things about the way that we're doing it, the way that we're designing our front end and we're approaching our front end. So I just sent you a link with an example. Not with an example, with inside StreamYard.
Okay. I'm not seeing it.
Oh, it's inside the chat. There's the chat function in StreamYard.
Yeah, we've got a private chat and a public chat, and I don't see it
in a private chat. It's in a private chat. It's in a private chat. I'm looking at it right now. If I press the chat button on the bottom.
There it is. I apologize. There it is. Okay. So Beautiful. Let me, sorry about that. It was right in front of me.
No, that's fine.
Pop that over. So is that the right one?
Yep. Sure is. Now,
okay.
Could you start by just pressing, there's that little button just on the right-hand side, that one there. Press that for me, please. Boom. Now you've got a tutorial for our dashboard that's just come up. Now, our dashboard is a new thing that we're doing for users on our blockchain. It's not finished yet, so this is still a little bit sort of in practice. Could you just press X on the tutorial that's come up in the middle of the screen, please? Just so that we don't have to deal with that. If you go to the right side of the screen, you're going to see a lot of options of different things that you're able to bring in, and they're different informations, right? So select any of them and just drag it onto the screen for me. Boom, like that. Now, if you could select the one below the one that you just selected, that's charts. Could you just drag a chart onto the screen for me, please? No, up to. One more, boom, that one. Drag a chart onto the screen for me. There we are. So drag another chart onto the screen for me and put it below that chart. Fantastic. So what you can basically do as a user is you can customize your own front end with multiple different charts, different trading screens. We're going to have a Talos bot, which is an AI agent that you can talk to. We're going to have, well, at the moment, we've got 1, 2, 3, 4, 5. We've got about 15 different informational boxes at the moment. 12 to 15 different informational boxes, and we're going to be launching with another at least 4 or 5. So this is going to be a customizable front end where users are going to be able to manage all of their trades and all of the data that they need, right? They're not going to have to find data from 7 different places anymore. You're going to have the capacity to have the data for what you want right there in front of you. And in your screen, for example, if you could just select any of the boxes on the side and put it horizontally next to one of the charts, and you'll see that you can actually expand out from that thickness as well, of course. Oh.
What?
Okay, that one isn't working. Actually, that one doesn't seem to be working right now, so I do apologize. I'm not going to sit here and try and figure it out. It's probably because we're still playing with it in the back end, right? So you're going to be able to put it out horizontally as far as you like, and then vertically as far as you like. So you're functionally going to have the capacity to put all of this information in the screen in front of you. For example, 3 charts, 4 charts, 3 trading screens so you can trade directly on those charts, and then 3 depths of markets or 4 depths of markets, 1 for each of those markets that you're looking at, and then the order book for each of those charts, right? And then you could do the order book either for our DEX or the order book for the entire Cardano ecosystem. And you can have multiple markets up simultaneously, and you'll be able to trade simultaneously with all those markets, right? And this is heading a lot more towards what a traditional trading station in the stock market, for example, would feel like, where you have 5 different markets up, and with these 5 different markets, you're able to engage with them simultaneously because you have all the information there in front of you. And we're going to also be bringing in a system where you can pop out and you can create multiple tabs, so that you can actually pull a tab across to a different screen, and then you can have 2 full screens of just markets that you can look at and directly engage with, or 3 full screens of just markets that you can look at and you can directly engage with. So this is something that we've been working on for quite some time, but this is going to be one of the big customization options that are given to users, that they're able to make their trading experience more customized and more unique for them. If you go to DEX, exit staging. Go exit staging now. I don't want to give away anything else because our front ends aren't good enough just yet. We're still building them.
Okay.
What?
So,
please.
What do you want me to X out of this altogether?
Yeah, just go to normal. Just go to the normal VyFi side if you could now. Please. Okay. Yeah, perfect. Now, so there's one really big difference. So if you go to one of the big things, you can actually sort of exit our site. I can sort of discuss the other stuff now. I don't really need the site up in front of us. Unfortunately, there's not really a whole lot that I can show as of yet, that I'm happy to show, I should say. I could show you some stuff. It just doesn't look spicky yet. It doesn't look perfect yet.
Okay.
So we are building Plutus V3, of course, and we're going to be the first Plutus V3 product on the entire blockchain. And we're starting our journey in Plutus V3 with something called safe swaps. Now, for people on other blockchains, safe swaps aren't going to seem like a very big deal, but there's something that the Cardano blockchain has been missing for a very long time. And that's basically the capacity to conduct OTC trades. And OTC trades are over the counter, which means that 2 private parties are able to swap between each other, and only those private parties are able to access that swap. So an example would be you're on Discord and you found someone that you want to buy an NFT off, and you want to do a private exchange of that NFT. That's a fairly common use case, right? At the moment on Cardano, you basically have to do a you send it first and then I'll send it, or I'll send it first and then you send it. And that's not a super safe system to be managing, particularly if you're doing large, if it's a $5,000 NFT, you probably don't want to be running that system to ensure its trade, right? So an OTC allows you to come, or a safe swap is what we're calling them, allows you to come to our site, you put in the asset that you want to send, you put in the asset that you want to receive, the wallet details of the receiver, the person that you're sending that request to, and then you submit. And then when that person logs into our site on the next time, they're going to receive a notification that says you have requested a safe swap for this amount in exchange for this asset. Do you wish to complete the safe swap? Right? And it's as simple as that. Then the swap's completed safely, the contract acts as an escrow, and you're all done. So that safe swap is sort of going to be a much easier system for people that want to do OTC trades between each other. But we've expanded this out, and we've also been able to essentially build into this system a large-scale, automated large-scale distribution. And the way that we do that is essentially an OTC, which is just a private trade between 2 people. If we make the actual buyer of that OTC have a buy cost of 0, now we don't have an OTC anymore, we have a claim, right? So I've put in an asset that someone else can purchase for $0 on my front end. In other words, they're claiming that asset. So as it stands currently on Cardano, if a project wants to run an airdrop costs about 1.4 Cardano for every user that's involved. So like there's the outright cost of running an airdrop on our chain. And that means that if you are, for example, a stake pool operator or a project operator, and you've got 10 to 15,000 people that you need to airdrop, and we were actually just talking with an influencer last night about exactly this, who runs a stake pool and has 15,000 people involved. It's going to cost him almost 25,000 Cardano to run an airdrop, or 20,000 Cardano to run an airdrop. And most of the time, you don't have 20,000 Cardano to give away, right? Like, it's just not realistic. Exactly.
Absolutely.
So we have built into the safe swap, we have a large scale import function where you can basically set up a spreadsheet. We've got the rules in our docs on how the spreadsheet needs to be set up, but using our transaction cart, which our transaction cart is like an Amazon transaction cart, you can bundle all transactions on our DEX and you can execute them simultaneously. So you could run 50 different transactions on our DEX at the same time: buy, sell, remove liquidity, add liquidity, put in lottery tickets, run the bar. All these things can be done simultaneously on our DEX with the transaction builder, with the transaction cart. And if people import large-scale distributions with lots of people to be distributed, we import it through to our transaction cart, we put it out simultaneously, and then a project, for example, could essentially put in a request for 10,000 safe swaps to 10,000 users, so 10,000 claims, and the project's only going to have to pay for the network fee for setting that up. And the network fee is going to be about 0.17 Cardano per user instead of 0.14, right? So we've reduced the cost for running a task like this by almost 10x, right? It's almost 10 times cheaper. Not exactly, it's about 9 times cheaper, right? Which is literally a whole new world for projects being able to run distributions on our blockchain in a cost-effective manner. And we're hoping to see a bit of a renaissance of distributions taking place now that there is a cost-effective way for projects to be able to manage it without having to build their own software, right? Like, it just exists on chain now. That service now is there. And that's a service that previously did not exist.
I love it, man. And was this one of your brainchilds, or did somebody from your team come up with this? Man, holy smokes. I was telling everybody earlier that you have a crypto savvy that is basically unheard of in this space. And that this just kind of goes to show it.
Well, look, it was born out of, I guess you'd say, working with other projects. Like, a lot of the stuff that we do is, I guess you'd say, corporate work, right? A lot of projects in the Cardano space need X done or need Y done. They don't know how to go about it, so we help them figure it out. And we were working with Dedium. I don't know if people here have heard of that project, but they're a fairly decently sized project on Cardano that are working on derivatives. And they wanted to run a large-scale distribution to their user base. And they came to us and they were like, how do we run a large-scale distribution on Cardano? And then we kind of looked at them and were like, we actually don't know. We've been on Cardano for 4 years and we can't answer that question for you. And then when we realized that we actually didn't have the answer to that question, we were like, that's ridiculous. Like, why isn't there an answer to that question on our blockchain? Like, if you need to do a monthly distribution to 5,000 people, they need to do, I think it's about 2,000, 3,000 a month, actually. If they want to do a monthly distribution to 2,000, 3,000 people a month, it shouldn't cost you 5,000 Cardano a month. You know, like, that's just ridiculous. So we fixed it.
Not only are you saving people on the upfront cost, but, you know, there's a pretty good possibility that Cardano is not going to sit at 70 cents for very long either. And so when you look at what that saves them in, you know, in 3, 4, 5, 6 months, as Cardano can, you know, possibly be hitting, you know, new all-time highs, it's actually, you know, it's almost uncalculable.
Mm-hmm. Absolutely. And that's something that, you know, we want. One of our biggest aims on this blockchain, right, is to bring together tech on the blockchain in such a way that we're utilizing the blockchain, I guess you'd say, in a technically sound manner. And let me describe that a little better. A lot of the time, projects, particularly in Cardano, are very focused on mimicking the way that products look on other blockchains, because that's what customers are used to in their heads. And that creates an environment where there are a lot of, I guess you'd say, copy pasta feeling projects that feel a lot like a project on Ethereum or a lot like a project on Solana or somewhere else, because there hasn't been the time, and I'm not going to say time and effort, it's more of a marketing decision. They think that that's what users are going to want to engage with. And I can understand that reasoning. But what it undermines is that Cardano has a lot of unique technology. And with this unique technology, if you're thinking in the same design process as an Ethereum dApp or as a Solana dApp, you're going to miss out on a lot of possible implementations and products that become available to you when you think about it from a Cardano point of view. And let me give you an example with that, with another product that we're bringing out with our V3, which is our liquidity builder. And that's a gorgeous cat, by the way.
Thank you.
Super cute. So our farming is non-custodial. So what does that mean? That means that as soon as you put your tokens into an LP, you are instantly farming. So you are farming as soon as you put the tokens into the LP. And this means that you don't have to do anything as a user to access your farm, right? Because your farm, as soon as you put your tokens into the liquidity pool, you don't have to you don't have to run any more transactions. You don't have to put it into a farm. You don't have to approve a farm. You don't have to be spending more money making stuff happen. You literally just add liquidity, LPs come back into your wallet. That's it. You're automatically farming. And the beauty of this is that it means that we automatically roll up all of your farms when you harvest. So everything comes through at once. But the real beauty of this system is that now the LP tokens stay in your wallet, which means they're no longer just a throwaway. They're no longer just something that you get and then you instantly get rid of, take it out of your wallet and put it into a farm and forget they even exist. Now they're tokens that we can actually use those tokens as the derivative that they are, because those tokens do hold, let's say in the case of Cardano VyFi, my token, those tokens do actually hold Cardano and VyFi inside it, which means there is real value inside those LPs. They're not just pretend value. They are real contained value inside each of those LPs. And those LPs have a price, I should also add. They have a value. They have a dollar figure value per LP token. So this means that we can actually start creating layered liquidity pools with our liquidity pool tokens. So for example, I could take a basic liquidity pool token, match it, let's say like Cardano VyFi, match it again with Cardano, and then put those into liquidity together. So now I have VyFi Cardano LP with Cardano. So that would be a VyFi Cardano LP, or we call that a simple layer 2. Because it's the second layer of liquidity. And this gives you now an adjusted risk structure. Instead of your risk or impermanence loss being the shape that you have in a normal impermanence loss curve, and it split 50-50 between two tokens, that impermanence loss curve is now going to be 75-25 with a weighting towards Cardano. In other words, you have more Cardano risk than VyFi risk. And by layering liquidity pools together, you can build a whole host of different risk profiles. And in our V3, we're releasing what we call the Liquidity Manager, which is functionally a system that allows you to build out up to 7 different liquidity pool types. And each of the 7 different liquidity pool types have their own unique risk structures for the user to take advantage of. And some of the really interesting ones. So one that I really love is we call it the inside layer 3. And I'm not going to go through what it looks like from a construction basis. That just gets confusing. All of these liquidity pools will have an easy name to remember. And to put them together, our system automates a lot of that process for you, right? As well as give you visualizations of what the risk looks like and sliders that you can play with to compare the risk of this liquidity pool type to different liquidity pool types simultaneously. So it's going to be a very tactile and visual experience for users to understand. But what's really cool is that with our inside layer 3 LPs, the actual impermanence risk isn't based on the price difference between the token and Cardano. The price risk only exists between the 2 tokens that are in there. So let's say for an inside layer 3, you'd have, let's say, Ethereum, Bitcoin, and Cardano all together, right? But because of the way that these ones are designed, the Cardano's price has zero impact on the pool, on the pool's ratio. The pool's ratio will only change based on the difference in value between Bitcoin and Ethereum. So that means if Bitcoin goes up against Ethereum, you'd be earning Cardano. If Ethereum goes up against Bitcoin, you'd be losing Cardano. But what does this mean? We can actually take the reverse quote of that as well. So it doesn't have to be, that would be, for example, a Bitcoin Ethereum inside layer 3. If we got into the Ethereum Bitcoin inside layer 3, it's now the reverse, which means if Ethereum goes up against Bitcoin, you're gaining Cardano. If Ethereum goes down against Bitcoin, now you're losing Cardano. So this means that you've now got two sides of a coin. I could have, let's say, VyFi, MintSwap token, WMT, and ADA. I could put these into a structure together that when one goes up, I'm earning Cardano but losing Cardano in the other pool. And when the other goes down, I'm gaining Cardano in that one but losing Cardano in the other. In other words, I can now build, it's not exactly alpha neutral, it's about a 0.14 alpha neutrality between those two. But you can start to put together much more alpha neutral positions using this by buying both sides of an inside layer 3 liquidity pool, for example. So that it doesn't matter how those two tokens are moving, you're making back the Cardano based on the ratio between those two tokens, right? That's one example of a really cool structure that users are going to be able to play with, that are going to let them build really personalized risk profiles for their portfolio. And the best part, every single liquidity pool contained is simultaneously farming for you. So you can put together your risk structures and you're never losing your farm.
Wow. I mean, it sounds, amazing. It sounds it's a little bit technical, but I'm guessing that you guys, go over this, and like if people were to join your Telegram group, your Discord group, that people that have questions and maybe if they're a little overwhelmed by all of the technical jargon, you guys can kind of help them figure it out in your community.
Absolutely. Jump in, ask anything you like. I do know it's a little bit technical. As I said, my background was in hedge funds and I was a futures trader specifically. This style of trading that we've invented, and this is sort of invented because you don't have non-custodial liquidity pools in any other blockchain. It just doesn't exist. There's no such thing as a liquidity pool that earns you a farm without putting it into a farm. So this is something that you really can't get on other blockchains. And on a mathematical perspective, it's called an embedded liquidity pool, right? And you can essentially embed these liquidities into each other. But what we really want to do is, as you said, make this as easy to understand as possible for the user. And the way that we do that is by functionally creating one visual aids so that users are able to see what it is that they're receiving when they enter that liquidity pool. And the way that we do it is to essentially, whenever you select a liquidity pool type, one of the main things you're going to see is the impermanence risk chart for a base liquidity pool, and then the impermanence risk chart for the liquidity pool that you've selected. So you're going to have that visual representation right there in front of you on the screen, or the two charts laid on top of each other. So I can say this chart is much flatter than this chart that does that. Right, like one looks like that, the other looks like that, So what do we get? We get one which has got a flatter risk and one which has got a far more severe curve to its risk. So there's going to be that visual representation as well as the slider that you can move for the percentage change in a token, where we'll actually then move along the screen to show you where on that impermanence risk chart you're sitting. So you can see the difference between the base pool and the pool that you've selected. And then of course it'll tell you if the token was to move by this percentage, you would have lost, let's say, 20% of your value in a base LP, and you would have lost 7% of your value in this LP, thereby giving you a protection of about 60% greater than the base LP type, right? So all of this is going to essentially be synthesized for the user that are playing around. And in our liquidity builder, we've actually set it up into families of liquidity pool types. And there's 4 families of liquidity pool types. And that means that each of those 4 families basically have a similar risk structure. They look very similar, right? But it'll just be either more or less risky. In other words, one has got more price action, one has got less price action. So once you basically go into our liquidity builder, the first thing that you will be able to do is to select any of those liquidity pools types to build. Once you've selected the liquidity pool type, it's going to tell you this is the family of liquidity pool types it belongs to. This is the risk that you would expect from any liquidity pool from this liquidity pool type. Here's the comparison of this liquidity pool type that you've chosen compared to all the other liquidity pool types in the family. And this is sliders for you to play around with so you can see exactly how your value is going to change based on price changes. And we've got all 4 of those built into any time someone is going to be putting together liquidity. So, and of course, you can also turn it off, I should add. There is going to be an advanced mode that you can turn off all this information. If you think you've got to a point that you understand these different liquidity pool types, you don't need to be thrown in your face sliders and charts every single time you're doing different liquidity pools, right? If you're like, yep, I want to engage with a simple layer 3, I want to engage with an inside layer 3, I want to engage with a simple layer 2, whatever it is, once you've got the name in your head and you know how it works, you don't need to sit there and play with sliders, right? So we've also got that turn offable, but it's going to be there by default. And you're also going to be able to play with it on our dashboard that we showed before, right? So you'll be able to bring the liquidity manager into the dashboard, play around and work out what are the different liquidity pool types I want to engage with. And then from there, you'll be able to engage with them directly from the front page of our decks.
Okay, beautiful. And then, if people want to go buy the VyFi token, where's the best place to go grab some?
VyFi.io, definitely the easiest place to go. And the other one that I should add is that we have a distributive mechanism on our decks called the bar, which is similar to the sushi bar. Of course, in technical design, it's very different because we're on Cardano. But it's a built-in distributive mechanism that delivers fees through to users that have staked their VyFi at the bar. Okay. And if you do it on the top left-hand corner, you'll see DEX and then bar is the third option.
Yep.
Along the top. Perfect. And the bar is super simple, right? It's very easy. All you do is you deposit VyFi into the bar, and then you'll get minted X VyFi. We then take 30% of all the fees that are generated on our site. We use those fees to buy back VyFi from the market, and then we distribute that VyFi that we just bought back to the market to X VyFi holders. So functionally, by holding VyFi, you have access to 30% of all the fees that are generated on the site.
Okay, perfect. And then I'm going to be giving away some VyFi tokens at the end of this stream. I mentioned the Vesper wallet for folks that, that win the giveaway. They're going to want to get a decentralized wallet. What other wallets other than Vesper do you recommend to hold the VyFi tokens in?
Vesper's great. I use Vesper myself, so I'll always sort of exalt Vesper to the high heavens. You could also use, if you're on a phone, you can also use Tokeo, Tokeo. They're also a very good product, but they are a little bit newer, and they're working on multi-chain integration so that you can do lots of chains at once. So just be aware that they can sometimes have a few bugs here and there, as they've got a much, I guess you'd say, wider scope of product that they're still building and mucking around with. So there are some issues that can be found. If you're on a laptop, I highly recommend using Eternal, Eternl. And Eternal is going to be by far and wide the most straightforward experience of engaging with Cardano wallets. The one thing that I would really add, and this is sort of like a PSA, don't use Lace, which is the Cardano Foundation's wallet or IOG's wallet. They've somehow been able to use a wallet that only works a quarter of the time at the best of times. So try and steer clear of Lace. You will have trouble engaging with pretty much every dApp on Cardano if you try to use Lace. So just a bit of a heads up, use Eternal, use Vesper. There's a lot of great wallets out there. Lace just isn't one of them.
Awesome. So I know that you can't really get into the investment part and all of that, but I just do want to tell every one of you that's watching, this project has been around now for several years, gone through, as we mentioned earlier, some ups and downs, made it through a pretty bad bear market, and they're still sitting at, I don't know if these numbers are correct, because I do want to ask you about the burn that you did recently, but I'm seeing that you're sitting at a market cap of roughly about $26 million. And, you know, to me, folks, that's an incredible opportunity. I know that Steven can't talk about the price of the token and stuff, but this was $1.19 token at one point in time during the good times, and now it's down to about a nickel. And to me, that's just an incredible, you know, entry point. So do your own due diligence, do your own research, never take anybody's word for this stuff. You know, never invest money that you can't afford to lose. But you know, this is a cryptocurrency channel of investors, and one of the reasons that we had you on here today is because I definitely wanted to give my stamp of approval to this project. And I believe that there's, you know, that my community is probably going to go take a closer look at this, and hopefully we're going to see, you know, some buys come in from my guys, because I think they're going to see that this, you know, is an incredible opportunity. And I'll kind of just lead that into, tell me a little bit more about this big token burn that you either just got done doing or you're getting ready to do. I wasn't quite sure which it was.
Yeah, we just finished it. So one of the biggest, we've got a bit of a different tokenomic design, and I'll just quickly share that before we go into the token burn. We have the longest running emissions for any DEX in crypto, full stop. No one has got longer running emissions than we do. Our farms were originally designed for 21 years function, which means that the rate at which our token supply is expanding is incredibly slow. And then when we actually launched our DEX, we launched the DEX and we ended up actually doubling the length of that emission schedule. So it ended up becoming about 40 years worth of emissions at the time that we launched our DEX. So let's just say we had tokens to emit for a very long time. Now, given that we were emitting for 40 years and the original plan was 20, that's how I originally designed it, the community felt like very comfortable in burning half of the uncirculating supply, reducing that back to a 20-year emission schedule, and functionally having a lower fully diluted value on the market when we launch. On the market, so it's easier for new users to look at the project and engage, right? Because a very high FDV can scare off users, and that's a fully diluted value for those that don't know. So we basically burnt 205 million tokens, or just shy of 205 million tokens. And now we've got a total supply of, I believe it's 245 million or so is our total supply. It's something around there. Or 235, somewhere around there. I'm sorry that the number's not off the top of my head. So we've just been able to burn half of that uncirculating supply. And of that, though, I should add, even with that remainder that we have, we've got a circulating supply right now of about 35 million. And between 35 million to that 200 million that we need to get to, it's still going to be another 20 years, or at this point, it's 18 years, I believe, until we get there. So there could be more burns coming up. We're not 100% sure, but certainly we've brought our tokens back into that 20-year farming cycle that we wanted, while simultaneously bringing down our fully diluted value, which our community wanted to see. And then, of course, still allowing, and this was the most important thing for me, still allowing for the long-term delivery of rewards to users for a long time. And that, to me, was really one of the core things that I wanted to bring into VyFi, was the idea of bringing some longevity into the design of a DEX, right? So many DEXs are built with this sort of 2 to 3 year time horizon. And then after that 2 to 3 year time horizon, unless you are unless you are SushiSwap or Uniswap or one of these big boys, right? You functionally don't really have a system for the incentivization of users to continue using your product and to continue providing liquidity to your product, so as to allow for the large scale adoption of your said product in the ecosystem, right? a large part of that can be solved with tokenomic design. If I'm able to build a system that's able to actually deliver rewards to people for an extended period of time over the years, I'm going to be able to build a customer base that uses this product for many years and doesn't rely on me just hitting some point of extreme popularity when now I'm functionally too big to fail within the context of the Cardano, within the context of the crypto industry, right? Because there's no such thing as too big to fail in crypto. Let's be honest. That's just, none of us are that big yet. But we need to sort of be providing those rewards and providing those incentives for a long time under the assumption that we're not going to be a Uniswap, right? People aren't going to provide liquidity to us for no rewards. That's probably not going to happen. So it was designed principally for longevity, to allow the community to be involved for many years and still be able to provide liquidity for income. And then, of course, it was so that we can sort of get down that fully diluted value so that it becomes easier and easier for future users to engage. And just quickly, our market cap is not 26 million. You might have looked at it after we'd done the burn, and everything on the data side was a bit screwy after we did the burn for the first few days. Yeah. I believe our full market cap is sitting at just shy of 3 million.
Wow. Okay. Incredible.
So we are really a small market cap project.
Yeah, I loved it at 26 million. I really love it at 3 million. That's amazing.
Mm-hmm. And the beauty, and I should say that at our peak during the last bull run, we hit a market cap of about 40 million.
Yeah, fantastic, man. Well, man, I really appreciate having you here. Do you have anything else that you really want to share with the community? Or are you ready to give away some VyFi tokens?
Yeah, I'm ready to give away some VyFi tokens. I think this last little bit is, we've got so much coming in the next sort of 3 to 6 months, and the next, let's say 3 months, right? Between our V3 decks, our liquidity builder, our dashboard, our safe swaps, they're the ones that I've spoken about today, but that sort of also leaves out a lot of the big technological advances that we've done on our blockchain. And that's really born out of the years and years and years of experience we have building on this blockchain. And as a result of all those years that we've spent building on here, we're being able to release the first Plutus V3 product on-chain. And what does that mean? Just really briefly, what that means is that we can do transactions cheaper, faster, more efficiently from a code-based perspective. And cheaper, faster, more efficiently means that users are going to have a cheaper, faster experience. And more efficiently, they don't really feel that, but the more efficiently is what creates the cheaper and the faster, right? So things get cheaper, things get faster, and most importantly, I think, we are able to build and develop a lot more quickly because the tech that we have now is a lot more adaptable and a lot more malleable. So we're going to be seeing a lot of things coming at a very high pace after we launch our V3 decks. And the reason being is because we now have the most adaptable system in all of Cardano. And we are the only project in all of Cardano that has, for example, data types. And a data type, we're not going to go into what a data type is, but needless to say, we're the only people on Cardano that can use them, full stop. And that means that we're the only people on Cardano that can create that can functionally create calls off-chain to my smart contract and tell my smart contract to do stuff based on off-chain logic. You can do that on other blockchains. You can't do that on Cardano until now. We've just built it, right? For the first time ever. And we're going to actually be releasing a lot of this new tech that we've built open source. We're not going to be open sourcing our entire backend. We're going to be open sourcing our smart contracts, and we're going to be open sourcing our tooling, right? Okay. So the reason we're doing that is because we really want to bring forwards the community writ large. Now, with the open source tooling, you know, we think that more projects are going to be able to take advantage of this advanced technology that we've been able to produce in Cardano. And in so doing, we're hopefully going to be able to bring up the entire ecosystem as a whole. Right? Because no one else in the ecosystem is able to as efficiently build dApps as we are right now because of what we've been able to implement. And just to give you an idea, We have taken the code base of a DEX on Cardano from anywhere between 50 to 70,000 lines of code, and our V3 DEX is now going to be about 3 to 4,000 lines of code. Just to give you an idea of what that optimization is, right? We've brought it down more than 10x. It's more than 10 times less code than what there is in a classic DEX on Cardano. And this is something that we're incredibly proud of, and that we can't wait to show the community. So that's just the last thing I wanted to add, was just a little talk about how advanced our new technology is and how we're bringing forward the whole blockchain into a new space where we can now engage and build dApps more quickly, more effectively, more efficiently, and cheaper for the user.
Awesome, Matt. Well, I am very much looking forward to seeing all of the new updates as they come to fruition, and, watching my bag of VyFi tokens grow. And really, for those of you that are watching today that maybe haven't subscribed to the channel, if you're excited about this project, hit that subscribe button, because a lot more content on this platform is going to be coming out in the upcoming months. And if you want to be on top of all of these, new additions to the platform and alerted right when they hit, we're definitely going to be staying on top of all of this. And in the meantime, let's go ahead and give away some VyFi tokens. So I'm going to pop back over here to this screen and just kind of show everybody what we're going to do. So we're going to end up, I decided, because we had some technical difficulties and we got off to a little bit of a rough start, we're actually going to give away $150 worth of VyFi tokens tonight. We're going to give 3 people $50 in VyFi. We obviously can't tell you what to do with it, but I would hope that if you win this, you have the foresight to keep it and look at this at its long-term potential. $50 probably isn't going to change anybody's life, but if you hold this thing and it does some massive gains, it could turn into a nice little chunk of money for you. But once again, that's up to you. But what we're going to do to make sure that nobody can scam the system is, when we do the drawing, it's going to pull up a name and say it was Gaming Crypto here was the winner. I'm going to then go to your channel like this, and you are going to change your about information in your YouTube channel. And once I've pulled this up, I'm going to leave it. And I know that some of you may not have Cardano wallets already, so I'm going to give you guys, till tomorrow to update your bios, and then I'll send you the tokens. And the other thing that I'm going to do to make sure that this is fair, you all have to be present to win. So on that note, what we're going to do for about the next minute or two is we are going to have you type in #DeFi into the chat, and that is what is going to get you eligible for the drawing. You will see this number here is going to start to go up from 0 as you guys start to type in #DeFi. This is going to go up. I'm going to give you guys, 30 seconds to a minute to type in #DeFi, and then we're going to let the random number generator go to work. I will assume that since you are all typing in #DeFi right now, that you should all be present. But once you see your name drawn, let us know in the chat that you are here, so that I can pull up your YouTube bio, your about page, to make sure that nobody tries to scam us. I don't know if you know it, Stephen, but I used to do these giveaways, and I would usually give the people 2 or 3 days to come back and let me know that they were a winner. And what ended up happening is I would get 3 or 4 people that would clone the YouTube account, and I'd have 4 people trying to come to me and tell me that they were the winner. And so that's kind of how I learned this little click on their bio trick and make sure that I'm not getting scammed. And so that's why we do it. That's why we do it. And we also want you to be present. We don't want somebody that jumped in the first 5 minutes of the live stream and typed in #VyFi or something like that, and then left, and then they're lucky enough to win. So you have to be present. So with that, folks, I'm going to go ahead and pop over here. I think we've given everybody enough time, and if you're still running a little bit behind, you got another minute or two. But we're going to draw the first winner here. And once again, I want to thank all of you for being here and supporting the channel. Jas B, congratulations on winning $50 worth of VyFi tokens. Our second winner is...
Congratulations, Jas B.
Yeah, man. And thank you, Stephen, for, donating the tokens and allowing the community here to have a chance to win some VyFi tokens. Very much appreciate
You're
it.
welcome.
Dave
Congratulations,
P,
Dave.
man, I love watching Dave win. This guy has been an OG with my channel. He is on every single stream. He even helps me admin sometimes. And so great guy there, and just very, very worthy of winning. And I know he's the kind of guy that will hold the tokens and support the project too. So excited for you, Dave P. Baby Deer, congratulations on winning. I don't believe I've seen that name on the channel before. Maybe you came over from the VyFi community. I know a lot of your community is here tonight and looking at everything that we talked about too. So I want to thank the VyFi community for coming out so strong and supporting the project tonight. And then last but not least, we have Dexter. Dex, awesome, man. That's one of my favorite shows. I just got done watching them all over again. I'm looking forward to the new one that is coming out this summer. So those are our winners. Let's pop back over here to the channel and make sure that they're here. So here is Baby Deer. Got your bio pulled up. Jazz B, there you are. Let's pull up your channel. Make sure I clicked on the right one. Yep. Dave P is here. Thank you for being here again, Dave. There's your bio pulled up. And then last but not least, we had Dexter right here, man. Awesome. So I've got all four of your bios pulled up here, guys. Go ahead. I don't see any of you having a Cardano wallet already in there. So it's getting late tonight. I'm going to take my wife out to dinner and enjoy the evening. I'll get those tokens sent to you in the morning, but I'll leave these bios up so that you can get your Cardano address in there, and make sure, once again, it's a decentralized wallet. You're not going to want to have these tokens sent to a regular exchange. That will not work out very well for you. So with that,
thank you for reminding them of that, Brad. I just want to really reiterate that. Please make sure it's a decentralized wallet, guys, because otherwise the exchange is taking your money, and there's no point giving an exchange free money. You need it.
Amen, man. That's no fun for anybody. So thank you again, Stephen, for being here, folks. The link to their Twitter, their Telegram, their Discord, their website, everything is right in the top of the description here. So go join their community and learn more about this project. And we look forward to seeing you again on the channel soon, Steve. And thank you very much for your time.
No, thank you so much for having me, Brad. It's been a real pleasure. And thank you for everyone who's taken the time out of their day to listen to us here. It really does mean a lot to me. As always, we are nothing without the community. We are nothing without the people that support us. So really, I should be thanking you. I should be thanking you all in the community for listening to me. Don't thank me, Brad. I just came here and had an opportunity.
Awesome, man. I agree with that. Thank you, community, for spending your most valuable asset, your time, with us tonight. So with that, folks, have a great one, and we'll see you again real soon. Bye-bye for now.